Hey, it's Rav. Welcome to Everyday Investor TV show, the hottest investment show in the world. That's right. I said it. I don't care who knows it. This show is designed to help us grow our money. You see, often the challenge is we take our precious time, we go to work, we get a paycheck in order to eat. We take our time, we go to work, we get paid so that we can provide. And if you have a job and you're working, that is a great blessing. But imagine a world where money made you money. You could take that time and spend it the way you wanted to. You could spend it on family, friends, engaging in a purpose greater than yourself. That is what Everyday Investor is all about. Remember, when anyone offers you any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the ROI? What's the return on investment? 2, when do I get that return along with the money that I put in? 3, what's the minimum investment amount needed? And 4, you look them right in their pretty eyes and you ask them, what is the downside? What's the risk? If they can't tell you, turn and run really fast. Super excited about this show. We're going to be talking to my friend. Wait for it. We'll be right back. Coming up, we're talking to Arian Beyzaei from Enriched Academy about investing in our youth.
So what we did is we created this program for kids, and we asked ourselves, how do we get kids to watch this thing? Because they're playing video games, they're on YouTube, they're on TikTok, and it's like, okay, why don't we pay them?
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to Everyday Investor. Before we talk to Arian, super excited to talk to him. Let's go and find out what's happening in the world of stocks with Omar Khan. Over to you, Omar.
Thanks, Rob. Omar Khan here, guys, with Data Trading Weekly Market Update. The markets continue to move higher. Now, this is a little bit unusual. Summer, generally speaking, the markets don't move higher. Statistically speaking, like September, October, August, they're not great months, but the market has kept moving forward. Why? Well, one of the main reasons is because earnings have been really good. The amount of money companies are making, that's been really good. Secondly, the Federal Reserve met a few days ago, and they said that interest rates, therefore inflation, is not a major concern. So interest rates going up is not a major concern. So people have nowhere else to put their money except for the stock market right now. And you're seeing a lot of money come in the stock market, which keeps propelling it higher. It keeps getting all-time highs. But keep in mind, we're hitting September and October. And statistically, these are the 2 worst months of the stock market. So we'll see how it does. But for now, economy is great. Companies are making a ton of money, and the market keeps moving up. Back to you, Rav. See you guys next week.
Thanks, Omar. Always great to learn from you. Arian, thank you so much for being on the show with me.
Oh, thank you so much for having me. Big fan of the show, and you, Rav. It's a pleasure.
Oh, come on, stop it. Listen, I'm a fan of you guys. I really am. Enriched Academy, love it. My favorite shows are Dragon's Den, Shark Tank, and I remember when Kevin and his partner came on many years ago, and I was just like, this is amazing. I mean, back then, and still somewhat now, it was dedicated to the youth, and I'm a big fan of loving our kids, nurturing them, teaching them things that I was never taught. I know you're significantly younger than me, but I was never taught, and I am assuming today it's still not taught by our parents, the schools, churches, whatever the case is. And so when Enriched Academy came along to teach the youth, and now you teach everybody from, cradle to senior, talk about your involvement, Arian. You're a speaker, you're a trainer, you're a coach, but you're also, and while you're on the show, you're an investor. And you dot I's, you cross T's, and there's a lot of things that people don't know. But how did you kind of get married to the Enriched Academy family?
Yeah, great question, Raf. So I've been with Enriched Academy for 8 years. And so I started when I was like 2 years old. But, when I first started, I just graduated high school. High school wasn't really for me. University, I knew wasn't a good fit. So I saw Enriched Academy like you on Dragon's Den. And I'm like, whoa, these guys are awesome, trying to teach the youth about money. So I reached out to the co-founder, said, hey, would love to be a part of the company. Initially, they didn't respond to me. So I sent a 15-minute video of just me behind a webcam like this, talking about their company. I did some research, studied their competitors, and they gave me a shot. So I started off as a speaker there. I was traveling across the country, and I wasn't even 20, doing speaking engagements, teaching people about financial literacy. And since then, now we work with a lot of corporations and associations to just try and spread financial literacy. That's really the mission of Enriched. We want to make financial freedom accessible to everyone. We do it through education, but education is just the first part of the equation. A lot of Canadians read books, they watch videos, listen to things, and those are all great. But what we've noticed is a lot of people don't take action on it. They get nervous, they get scared, they don't take those steps. So we're really on a mission to not just educate Canadians, but really help them take those steps to living a financially free life.
No, I love it. And, and that's what I love about Enriched Academy, teaching just a simple thing like that. And I mean it when I say simple, because there's an art to teach. My philosophy, even with Everyday Investor, is if I can't teach the, grade 12 high school student the concept on any of my shows, then I'm not really doing a great job. Talk about you were in high school when you got involved. Talk about how important it is, simplicity to start. Of course, things build on each other, but how important is, just breaking down things, which is an art, so that people can comprehend.
Oh, it's everything, right? When you complicate things, complexity creates just, resistance. It creates nervousness. When you see something that's overwhelming, you don't want to do it. So when you talk about investing, one of the first things we ask ourselves is, okay, how do we make this simple? How do we make this so people watch it and are like, I can do this. This isn't hard. I can do a self-directed and use my TFSAs. But it all starts with that simplicity. And I think Albert Einstein said, if you can't explain it in like a grade 5 language, you don't really understand it. So money is not complicated. It really isn't. It's quite simple, these topics, but for some reason it's become very overcomplicated because it's just the jargon, terms like MER, management expense ratio, asset allocation, rebounds, dollar cost averaging. It's like, whoa, I need a PhD to understand these things. You really don't. So yeah, to your point, Rav, it's critical, right? And especially for students, what engages students? It's not talking about retirement planning. They're not thinking about retirement. Even the word financial literacy is not a very engaging word for a high school kid. As soon as someone in grade 12 hears financial literacy, they're disengaging. It's just not an exciting word. So you got to excite them. You got to keep it simple, and you got to make it like attainable. Like, whoa, I can actually start investing in real estate in high school, and you can. And a part of our program, we have Tyson George. You got to get him on the show. I'll get to an intro for you, but he's 17 years old. He owns 7 investment properties in London, Ontario. And he went door to door selling meat to save for the down payments. His parents sign on the mortgage, don't help him at all. So we interview like kids that are doing great things to inspire kids as well. So yeah, simple and actionable.
No, I love it. I work with a firm, Graybrook Capital, and even what does capital mean? It just means money or equity, or, is this an equity deal or a debt deal? Is this, and what's the absorption rate on this? And but it's all just translated to normal language. Aaron, I barely finished grade 12. I did because my mom was, weeping and wanted me to, so I did. But after that, and it's not because I think that education, formal education is not important. It just wasn't for me. I wanted to say 1 + 1 = 2 with a couple of rocks. I didn't need to do it, on a computer or writing it down in a journal. And so I love your guys' product. I love what you guys do. People have been, if you're watching the show, I don't say that about a lot of companies, but do your own research with Enrich Academy. Tell me, Arian, about this one where one of the programs where I'm really telling a lot of people to investigate in, and my kids are just about to do it, my own two children, where you guys kind of even pay back. There's a bit of an incentive. And so talk to me about that program. What's it called? How does it work?
Yeah, so that's called the Enrich Start. So this is a program specifically for parents to teach their kids about money. And the reason we created it is because we had so many emails from parents saying, my kids don't listen to me, guys. Let alone managing money. I can't even get them to make their bed in the morning. So what we did is we created this program for kids, and we asked ourselves, how do we get kids to watch this thing? Because they're playing video games, they're on YouTube, they're on TikTok, and it's like, okay, why don't we pay them, right? That's the best way to get kids to watch something. You pay them. So we have a program, it's 3 hours long to teach kids from, 15 years old to 21, even earlier, you could do 12 years old, what they need to know about money for that timeline. And at first, kids are so excited because the parents will come up to them and be like, hey, Rav Jr., I'm going to give you $100 for 3 hours, 33 hours. All you do is got to watch this video course and take a quiz. It's super easy. And the kids are excited, like, $100, I can't wait to go to the mall, buy some new shoes. By the time they're done watching that thing, these kids are asking their parents things that parents don't know. Like, I want to open up a TFSA account. I want to start saving for an investment property. Like, the stories we get are just unbelievable. And again, what that program is, foundation. How do we help kids think differently about their money and just get them thinking correctly to live a financially free life, to avoid student debt or taking on credit card debt, to budget properly, to track their net worth, to start thinking about assets, to avoid buying a brand new car after graduating. Like, just these simple decisions can have a huge impact on people's financial life. Like, the difference between buying a brand new car and buying a used car is huge. Just that one lesson there, or saving 10% of every dollar you make. So that's what we really tried to do. It's called Enrich Start. And again, the program's $200 for the parent. And then once the kid goes through it, we give the kid $100. We sign a check to them to incentivize them to watch it. And it's unbelievable the response we got from that program.
No, listen. Parents out there, if you want to stress and worry about your children, don't take the course. No, I think that's fantastic. And then obviously it goes from there. You guys have a 6-month coaching program. You're doing so much, and for you even, I want people to know. I mean, Arian, you're trading your own stock options, doing whatever 20, 30% annualized returns. Any real estate? Are you doing some real estate as well?
Absolutely. I got a duplex out in Oshawa, Ontario. I've got a pre-construction near Yorkdale in Toronto, another pre-construction in Calgary. I love real estate. I think it's phenomenal. I love everything. I love private lending. I love real estate. I love stocks. I love, like you mentioned in your intro, having my money work for me. It's the best thing in the world. It's like having an employee working without you having to work. It's
No. But what I love about it is, and love about you is that, what I want people to hear about Enriched Academy is you're going to teach on mortgages. You're going to teach on used car versus brand new. You're going to teach on how does a credit card actually work. You're going to teach on, all these kind of things that should be simple and are not. You're going to make it simple. But then you also talk about real estate and development and stocks and options and that kind of. Listen, it's great, Arian, having you on the show. Let's take a quick break. We're talking to Arian Beyzaei, and he's teaching us how we can invest in our youth. Don't go anywhere. Everyday Investor continues in a moment.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
it's Rav. Welcome back to Everyday Investor. We're talking to Arian. He's teaching us how we can be focused on the youth, help the youth. But really, the big secret is not just the youth, all of us. Education mitigates risk. Knowledge mitigates risk. It breeds confidence. And so grateful for Arian on the show. Before we continue with him, let's find out what's happening in the world of mortgages with mortgage expert Kyle Ford. Over to you, Kyle.
Thanks, Rav. This week I want to talk about the cottage boom. As the pandemic continues on, many Canadians are taking the opportunity to work from home and even considering relocating to an area that may be more desirable. One of the most important things you need to consider when it comes to financing cottages is the habitability of the home. What that means, in order to get an A-rate conventional long-term mortgage on the property, you're going to need a four-season property with a verified heat source, potable water, and a four-season septic sewer system. The other thing to consider with the cottage market is we've seen a great increase in property values. If you're considering putting 20% down on these properties, it's very important that the property appraises for what you purchased for. There's examples of properties selling for hundreds of thousands of dollars just short months after, and they're not being proper comparables to support that value. Make sure you're working with a trusted realtor, and if you have any questions on financing your next cottage, don't hesitate to reach out to myself and the Kyle Ford Mortgage team.
Thanks, Kyle. Always great to learn from you. So, Arian, I've followed you guys for a long time. I've spoken to one of the founders, Kevin, and he's done just a phenomenal job. You guys are doing a great job. You have a 6-month, kind of coaching program. You have the 3-hour program for the starters, for kids 15 to 21. What's something that someone can kind of expect? Like, give me something that you would teach, for example, in, everybody puts a few bucks in RSPs or mutual funds or has a financial advisor. What would you say on that topic?
Yeah, a lot of our students that come into our program, because money can be so overwhelming, the first thing we think is, okay, how do I delegate this? How do I get someone else to manage my investments so I don't really have to worry about this? And it's not bad to have a financial advisor. We're pro financial advisor, but this is like a babysitter for your money. You don't want to just go run out and find some random person to take care of your kids or to manage your money. You want to do your research. You want to make sure you're asking those tough questions. One thing we found is most Canadians are being taken advantage of by the financial institutions. Canada right now charges the highest fees in the world on RSPs, on TFSAs, even on RESPs, which are your savings for your kids' education. It's something the industry created. It's called an MER fee. So what an MER is, it's a management expense ratio. It sounds complicated. It really just means commission. That's all. It's a commission that you pay to your financial advisor and on your investments. Again, it's not bad to pay this fee. It's bad right now. If you're watching this, you have money in a TFSA, RSP, RESP. Do you know what your MER is? Do you know how much you're paying each year? And most Canadians don't. So to give you an example, there's one of our coaching clients, her name's Lisa Mash from Mississauga, Ontario. At the time, Lisa was 45 years old, and she had $350,000 invested in her RSP.
$350,000 in her RSP. And you know what's one thing that's really interesting when I talk to people? I'm just curious by nature, and I say, hey, where are you investing? And they say to me, in RSPs. And they kind of stop there. And I'm like, yeah, but RSPs is just there's a custodian, like it's just a savings. Like, where is that? Where is it? What company is it with? How's it growing? But you're right. I mean, people don't, I think, first of all, Arian, people don't know what questions to ask.
Yeah.
I don't know if they're so lazy not to ask. I think they don't know what questions to ask. And that's why I say on the show, the number one question is, what's the return on my investment? And I don't know, people are just sometimes happy with 1, 2, 3%, you know, or they don't even know, they get their bill. And so anyways, that's another, when you come on next, we'll talk about the questions to ask. So we have one of your coaching students, Lisa. She had $350,000 in RSPs. Doesn't matter at this point where that was directed to. Go on.
Yeah, and to your point, rather, she had no idea. We're like, what funds are you messaging? She's like, RSP fund. We're like, no, that's not a fund, right? She just didn't know. She had this advisor for 9 years. They went to high school together. She was a great money earner. She was a manager at a real estate office, making a great income, saving a ton of money, but she just didn't know what her money was doing. So then we kind of asked her, okay, what fee are you paying? And she had no clue. So she eventually found out, we helped her. She found out it was 2.7%. That's what
2.7
MER is. Yeah.
Annualized.
Yes, right. And this is what people don't know. This is a fee you pay every single year on everything that you have invested, not just on how much money you earn, whether or not you make money or lose money. Even if you lose money, because the markets go up and down, especially with these types of funds, if you lose money, you still have to pay a fee.
So what you're saying is, I don't even know what that is. What is it, about $10,000?
$9,450.
Okay, so she's paying 9 to 10 grand, whether this grows or not. Whether this money grows or not, she's paying about $10,000 to Mr. Financial Advisor, which is fine if she knows she is and is happy with it, but she doesn't even know that that's what's happening.
No clue. And here's the funny thing, right? When she found out, she's like, I thought it was way higher than that. Hey, I get to keep 93 or 97.3%. I get to keep 97.3% and they only take 2 point. This is great. But unfortunately, that's not how the math works. And what's crazy here, Rav, is the way this compounds. Compound interest, I'm sure you've talked about, it is a beautiful thing, but it could be a very scary thing, right? Albert Einstein said, compound interest, eighth wonder of the world. The people that understand it earn it. The people that don't understand it pay it. So if you do the math here, and we did the math, we did like a projection 20 years out. So Lisa was getting a 6% return. That's what she was in her RSP. So if you take that $350,000 and you put it away for 20 years at a 6% return.
Okay, so
don't touch it.
So she's taking the $350K at 6% over 20 years, yeah?
Yep. So it would be $1.12 million.
That would grow to 1 point.
Yeah, 1.12. It's just compounding. It's beautiful.
Okay.
But big but
the MER.
But yeah, the MER of 2.7%, that is gonna cost her $452,000. 2.7%, it really doesn't seem like a lot. It's $500,000. So she won't have 1.12 million. She'll have like 670,000 from this small little fee. And Rav, it's about average in Canada. The average MER fee in Canada is 2 to 2.5%. It's even higher on an RESP funds, the Education Savings Plan funds. And we see this daily. We see this all the time. Canadians that unfortunately just don't know better. They don't know what their money is doing. They don't know what questions to ask, and they're being taken advantage of. It's just sad.
So then there's got to be a better way. What's the better way?
So what Lisa did, she got that 2.7% fee.
Yeah.
She just got it down to 1%. And I'll be honest, she wasn't someone that was comfortable to do her own investing. She wasn't. She was so focused on work, didn't have the time, just wanted to find someone to manage her money, didn't want to pay this crazy fee. So she went out, we helped her interview different advisors. She knew what questions to ask. She was now aware of this MER fee. So she was able to lower that 2.7 to 1%. And if you do the math, if she just got that 6% return, she would have 929,000 instead of that 670,000. So she just put like, you know, $260,000 back into her pocket by just making one adjustment, just by making one shift.
And it was it with the same advisor?
No,
she negotiated?
No, she had to find someone else because that advisor was not that was not a good advisor. Yeah, not at all.
So you know, I'm loving this. This is great. We're gonna have you come back maybe numerous times. But so Arian, what is the top 2-3 things that you really wish everyone would know right out of the gates, from 21 years old all the way up? Like, what do you wish that you could help people with? 1, 2, 3 things.
The first thing I would say is how powerful self-education is, right? Watching shows like yours, just investing in yourself is, you just don't know what you don't know. We just talked about a topic right now, right? You know, learning one thing can change your life, whether it's stocks or real estate or MER. So educate yourself, number one, hands down. Number two is automate your finances. That's a big tip I have for people, just because you're so busy. The everyday person isn't going to spend 15 hours a month to manage their finances. You got to get really smart with your money and learn how to automate things. You got to learn how to make the transfers, how to make sure your bills are paid automatically so that your credit score is going up. You need to be automatically investing a certain amount of money. You don't want to spend 15 hours a month managing your finances. It's going to drive you nuts. So that's the second thing. And the third would be compound interest. It's such a beautiful tool, but you got to understand how it works. It's tricky because compound interest rewards those that are patient. It really does. The first couple years of investing are boring. Nothing happens. Your money isn't really growing and you get discouraged. Like, oh, no, I don't want to do this anymore. It didn't work. I'm going to go try something else. But you're not understanding compound interest. It's a hockey stick. It's slow. And then all of a sudden, whoa, what's going on? But people aren't patient enough to get to that hockey stick moment. They quit over here. So those would be my big 3.
No, I love it. I love it. I love it. Educate yourself, simplify your life, and anything worthwhile takes time, whether it's our health, physically, mentally, whether it's relationships, whether it's money. You know, you work on it slowly every day, and then eventually one day, because of compounding, it grows into something. Listen, Arian, let's talk after the show here, because there's just too much to talk about when it comes to, frankly, education. I mean, that's what Enriched Academy is. It's an education company that has different branches, and whether it's coaching, mentoring, helping the youth. You just got into Alberta. The province of Alberta has hired Enriched Academy to do what?
Yeah, so excited. It's only taken 10 years to get a deal like this, but the government of Alberta, all grade 7 to 12 students, or most grade 7 to 12 students, are going to be going through the Enriched Academy curriculum to increase their financial literacy. So we're beyond excited, and we're going to do such a great job for the students of Alberta. And we're going to go to each province in Canada and make this one of those things that we're not saying anymore. Why didn't we learn this in high school? No one's going to be asking that question anymore. Why didn't we learn this in high school? We want to get rid of that once and for all. And it starts with the government of Alberta. What a proactive government. So we're excited. Can't wait.
Beautiful. Love it. Arian, thank you so much for being on the show.
My pleasure.
And thank you guys for watching the show. Without you, we wouldn't have one. Make sure you tune in next week. Same place, same time. Honey, love you. I'll be home soon. Bye, everyone.